Hey everybody, are we here? Are we live? Do you hear me? Do you see what's going on? Let us see. Is there anybody here today in the private area? Here we go. Oh boy, I got a team of highly trained monkeys has been dispatched to deal with the page break. Look at that. It seems as if the YouTube chat thingamabop is problematic. I wonder if it's rolling. If you can hear me, wave. If you cannot hear me, don't. Yeah. Okay, well, people, while the technical wonder minds put together their power, here is the news. I see it's okay. Well, I hope you guys can see the chat live because for some reason we're not seeing that here. But here's some exciting news, folks, to start your Tuesday. It comes from CoinDesk, and it's an article, opinion piece by Michael J. Casey, who writes that proof of stake could lead to crypto banking. Let's avoid that. And it's an opinion piece where basically he raises the issue that, Constantinople, the big Ethereum upgrade, was delayed at the very last minute. There was a bug found, and they, rather than publishing it with that known vulnerability, they decided to delay it, which is obviously a good thing because you don't want to release something that makes your system more insecure or unsecure. Basically, the challenge for proof of work as opposed to proof of stake, he says, comes in terms of computational efficiency and in its public perception as an environmental threat, right? And so if you know anything about mining and if you know anything about crypto, you know that a lot of, in fact, probably the majority of at this point, mining operations use at least some, if not a majority, if not entirely, alternative energy sources to power their mining because the mining could be quite expensive if you use traditional electricity. So sure, there's obviously plenty of miners who just use straight, wired to the grid electricity, but an increasing number, don't. But still, there's this perception that proof of work is bad for the environment because it uses electricity and all that stuff. Well, I mean, in many ways, that's really just a load of misperception. And nevertheless, it is the perception, right? So it has to be dealt with. And here's the problem, right? If we make crypto, and specifically Bitcoin, if we force things like Ethereum to become proof of stake, right, removing the proof of work, right, we change the game in many respects in terms of how crypto works and how it can enable all these wonderful things. Because proof of work, whether you think the technology is outdated or not, proof of work is a demonstrably more viable and provable form of evidence, if you will, for the blockchain to accept your work as the proper work that it is. And effectively what it means is that you, with proof of work, have a much more secure transaction than with proof of stake, which, although still incredibly hard to hack, the ordinary person isn't going to just hack this stuff up, but it is possible to find holes in proof of stake because it depends on what you stake, right? And that opens up a whole new dimension of vulnerabilities that Bitcoin does not have, right? Bitcoin may or may not have other vulnerabilities. I've spoken about a number of them in the past, but this particular article talks about Bitcoin and Ethereum and what it could mean for banking. And, it talks about the concept of basically what would happen if banking had access to control the more of the cryptocurrency sphere by proof of stake, right, than they would by proof of work. Because proof of stake opens up a lot of other possibilities. On the one hand, it's extremely useful. And with smart contracts and everything else Ethereum has built in, arguably it's massively useful, right? And other networks like EOS and Tron and etc. have, gone out of their way to build spin-offs of Ethereum because they see the value of that system, and in many ways it is very valuable, and they've made it super fast, and there's all these use cases that they've, they're trying to show. And, there's no shortage of things happening in those areas, in those projects, right, where we're seeing more interest, right, in those things by investment houses, and they are looking at those solutions, which is great and all, but those are not the top brand name cryptocurrency at this time. And the one that is, part of the reason it is at the top, and part of the reason it has been there since its inception, and since the very first competitors came around and did not overthrow it from being at the top, part of the reason Bitcoin is popular is precisely because it is strong in terms of proof of work and censorship resistance and political resistance, political neutrality, right? It is incredibly hard to find another currency, in fact, I don't know of any, that have more decentralized practicality than Bitcoin, and that have all the other values that it offers, right? And part of that, again, is the DNA that makes up Bitcoin, which includes proof of work as its protocol. Proof of work allows, again, to wrap that up for you in a nice little package. Proof of work allows you to have a much more confirmed consensus of, nodes agreeing on the longest, hash in the blockchain as the right one. It's demonstrably the proof, that the work was done, thus the name, hence the name. And it is absolutely more secure than proof of stake. So that's really why I think it's important, despite all the other valid reasons, that the proof of stake is not the best system in terms of in the interest of the crypto consumer or the retail investor, or what the smart money snobbishly calls the dumb money. And it's important that the mass market have access to the best possible system. And maybe Bitcoin won't be the leader in the future. Maybe something better will come along. Maybe something better is already on the market and is just growing into place. But at the moment, the marketing leader is the one that doesn't have, ironically, an official company or marketing department or anything else. I say that as a marketing person, right? Bitcoin is powerful because of its organic strength. That's what makes so many people market it happily, right? At their own expense, because they know they can make money through it, etc., without having to deal with a company that owns all of the Bitcoin or is the central processor or is anything else, right? It's really independent and neutral out there. A lot of other platforms don't have that. And now in this other story here, we have another story from CoinDesk that says basically CoinDesk is launching cross-border wire transfers for institutional clients in Asia, the UK, and Europe. What that really means is that Coinbase is allowing people who have loads of money, what they call whales, to do easier, wire transfers across borders internationally, right? And why is that important? Well, at the same time, Coinbase is offering a new over-the-counter trading desk for US and European markets. So you've got Coinbase, the largest procurer of Bitcoin in the US market, which has fallen behind in terms of its offerings and competitiveness and volume of traffic, has fallen far behind. And where they used to be the market leader, they're nowhere near that anymore because of sheer volume. Right? They might have the most customers, but those customers have tiny amounts of money in their accounts and they don't use it very much for a number of reasons. One of them is the limited choices. They've since tried to add some coins here and there, but they're clearly not a massive supermarket exchange if you want to trade hundreds of coins. Right? They're not anywhere near there yet for most people. But if you're a whale, right, if you're willing to buy in significant quantities, and are looking for big discounts that don't affect the market price and all that stuff, you go to OTC, right? And now CoinDesk has an OTC operation. It runs it, through it's an agency, right? That's what they say here. What that means to them is, and what that means basically is that they never trade on a principal basis or against our clients. And Coinbase never trades on a proprietary basis. And basically what that means is OTC, right, as an OTC desk running on Coinbase is going to be a very useful tool if you are a whale, if you are a big investor, if you run a small business that has, significant investments, if you are in charge of investments at a bigger institution, you can now use Coinbase for OTC buys and sells. And that, that doesn't change the whole market or anything, but it makes available another tool that is popular with tens of millions of people already, and which, not only that, has been used by tens of millions of people. Let's put it that way. There's tons of millions of Coinbase customers. I think there's like 20 or 30 million at this point, probably. Coinbase customers, and those Coinbase customers, many of whom have not small amount of monies to move around, or they know somebody who is a trader or something else. But of course, they might work in the markets or whatever. They might be traders, whatever it might be. There's plenty of people who use Coinbase. When you've got 30 million customers, there's no shortage of types of communities you can reach. And with that kind of reach, they are able to get the story out much faster about coins that are coming onto the market, getting great deals available to investors and traders at better prices, frankly, than their retail desk. And, that is a strong forward piece of news for crypto and the blockchain and the marketing, right, of the blockchain. Because ultimately, these market makers and these platforms and these trading desks, they're all contributing to the story, whether they realize it or not. They're all contributing to the marketing package of blockchain and crypto, right? They are, in a sense, building the backstory, the history of how crypto came to be the world's leading currency and other form of assets. Right? While that is far from being the case yet, we are so far from that having been the case. It is not reality. We are not there yet. We may never get there in all of its fantasized outcomes. We probably won't. We may never even get to the point where we all use crypto. But the likelihood is that we will eventually move to something like that. And why do I say that again? Well, I've spoken a lot about the likelihood of growth and mass adoption. But it's not just mass adoption, it's also just people change the way they use assets, right? And we typically evolve forward with our use of technology, right? We always mention seashells when we talk about money, and then we mention, whatever it is, jewels, rocks, gold, silver, and then eventually, and copper, and then eventually they shaped it into coins of those metals, and then they eventually, after thousands of years of using coins, we added paper to those things. Well, the Chinese already had paper a long time ago, thousands of years ago too, that they were using for money. But it became common standard practice to print, reserve notes at some point, and also when the Bank of England started printing, banknotes and coins, and made it illegal to use, gold, right? And the U.S. did the same. They said you have to use our money and not gold as money. So people, why? Because it was more convenient and lighter and all that. So better technology to carry around a piece of paper than actual gold, arguably. But it's certainly lighter, so it's not as heavy. It has advantages to carry around paper and a few bits of change than it does to carry around sacks of heavy metals, heavy, precious metals. And so, the technology evolves and the habits of humans evolve and the history of how these things changes over time is important. And now it can be recorded on the blockchain, which is the next form of currency, interestingly. Right? Blockchain is the underlying protocol that powers Bitcoin and other cryptocurrencies are out there, all the forks of Bitcoin, for example, and other coins that have come out use different blockchains, and all these cryptocurrencies, whether you use classic blockchain or some other form of it, right? DAG, Tangle, whatever, all these different things are out there. They are all essentially betting on the fact that financial systems are improved for everyone involved, from the top to the bottom, when there is better accountability and transparency and everything else. And the only people that would oppose that are people who are benefiting from a system that is corruptible, right? That's the only people who would support a system that doesn't have better transparency and everything else in general, right? Yeah, there's always exceptions and everything else, but in general, if you think about it in calm and reasoned way, if you knew that using your existing dollars was when you could compare it scientifically, if you could compare that using dollars is a worse thing for you and your financial future than using Bitcoin, which would you use? Right? And it is demonstrable that it is worse for you to use the dollar than it is for you to use Bitcoin, just in the past 10 years. In the past 10 years, Bitcoin has gone from worth nothing to well over $3,000. It hit a high of $20,000, but it sits at over $3,000, right? In fact, let's look here. Do we have a coin market cap open? Folks, we do. We're at 119,000. Bitcoin's at $3,568, okay? Bitcoin, it was worth nothing 10 years ago. It's worth $3,568. How much is your dollar worth today compared to 10 years ago? In case you don't know, it's worth a lot less, right? About 10 or 20% less, because it goes down every year, a couple of percentage points. And since 1934 or something, since the current dollar note was introduced, it's lost more than 95% of its value, right? You can look at the dollar inflation calculator and see that for yourself, right? You can see where that is here. Dollar inflation calculator. Inflation calculator. Come on, inflation calculator. Load up for the people. They want to see this. What's going on here? What kind of internets are we on? There we go. The dollar inflation calculator. this. It's crazy. You want to know what your dollar's worth? Check out usinflationcalculator.com. Look at this. All right, so 1913 to 2018, right? Something you bought for $1 would cost $25.36. That is a cumulative rate of inflation of 2,436.4%, right? So now let's say you said, okay, well, what about 10 years ago when Bitcoin came out? Okay, let's go. 2009 and 2019. Calculate. Look at this. In the last 10 years since Bitcoin was invented, the dollar you put aside and invested in, or whatever, as a dollar, has gone down, or rather has inflated 17%, meaning it has lost 17% purchasing power. So whatever you bought for $1 10 years ago now costs you $1.17. Right? But you're not making money on that dollar, are you? And by the way, okay, so if you're making money, if you're trading on inflation, right, as banks do, if somehow you're making money, well, a lot of people do, but if you're making money on the inflation rate, right, 10 years of inflation, if you've profited that 17%, how's that 17% looking as profit against Bitcoin over 10 years? Right? Yeah, I don't think you can even compare that. The Bitcoin has gone from worth nothing to worth over $3,500. The US dollar has gone from being worth $1 is now worth 17% less, essentially. So your dollar's not working for you. It's provable. Bitcoin is. It's provable. Look at their graph. Look at the Bitcoin graph. It has just gone up and up and up. So what? It has a down year. It's had a down year more than once. That doesn't make it not. That doesn't mean it's not growing. Right? That doesn't mean that we're not seeing interest. We're seeing massive interest. Look at this. Right? The demise of the euro could trigger a devastating collapse. Really? Let me tell you something. If the euro collapses, right? Pandemonium, blood on the streets, and all that nonsense, you're going to see a lot of people switch to other currencies, right? Will they switch to crypto? Will they buy dollars? Will they do other things? Will they print up their own currencies again, right? Well, it's quite possible that they certainly will print their own currencies again. But how long will that last? You really think people are just going to believe the central banks again, openly and wholeheartedly, when crypto is already at the ready? Do you really think that a decade after the housing bubble and the global financial crisis of 2008, do you really think that people are going to say, yeah, give us another piece of worthless paper that's going to be dead in another decade? Or do they think they're going to say, you know what, maybe I'm going to put my money into something that I think has a future form of money that already exists, that is already available, that's already being backed by, all of the biggest investment companies. They're all putting in trading desks, etc. I think more and more people, if they see big fiats fall, they're just naturally going to switch into crypto, and it will become a default if the system of the current central banks actually fails horribly. But the thing is, the central banks can still play this game for another number of years. Don't kid yourself. They're not going anyway. They're not going away. They're not just going to give up their position. They don't intend to disappear. They think they are going to last a long time. They don't have a termination date publicly announced, right? There is no declared deadline for the end of the central banks. Even if it will inevitably happen, It certainly isn't something that they're scheduling, right? And here we have another article from the Toshi Times in which you see Bitcoin could actually replace gold. That's the supposition of the headline, reaching $10 million and save us from the debt crisis. It's written by Justin Caldwell, again at Toshi Times, another fantastic crypto outlet for media. And the article basically suggests, right, that 2017's bull run, right, was really full of unrealistic price targets, and a lot of it was pushed by crypto influencers. And now we're seeing in the bear market that a lot of the prices from before were kind of, based on a lot of suppositions about maybe old markets or old concepts, and that they're not realistic in today's market. And also, the idea is that Bitcoin is in fact worth far more than it is currently priced at. Right? So we see things like global debt being used as, a reason behind what is paving or was making the way for Bitcoin to come online and to be the standard currency, even if it's not the only one. And if it's a standard currency, then it may actually reach, as we've discussed before, 10 million a coin. Who knows? We don't really have any idea of how much it could be worth. Say 100 million. Why not? It sounds nicer. But, a lot of money, right? Bitcoin could realistically be worth, it is fathomable that a Bitcoin, which is made of 100 million Satoshis, could easily be worth $1 million one day, right? And that would mean that every Satoshi is worth a penny, right? And that wouldn't be necessarily enough to be a global currency at that strength, but it could certainly be a very good store of value for a lot of people. But again, with only 21 million at the very most, and we know there's far less than that will actually be available, it's something that only a very small number of people, relative to the portion of the earth, only a very small number of people ever actually own a whole Bitcoin. A very small number. So we will all be using Satoshis, really, day to day, if we're using Bitcoin. And that's, again, it does not need, nor would it be a good thing, for any one coin to be the only currency used on Earth. So I don't think Bitcoin will probably reach $10 million anytime soon. Maybe it will in 10 years, 15 years, who knows. But it's a little ludicrous to keep marketing this idea that we will all be using Bitcoin. We will not all be using Bitcoin, even if we are using parts of Bitcoins. You can call it Bitcoin because it's technically Bitcoin, but you'll be using tiny little pieces of it, really, called Satoshis. That's what you'll be using. And that's really the price point that should be interesting to most people. What is the price of a Satoshi? Because that's honestly what most people will be earning if they're using Bitcoins as a standard in the future. They'll be earning Satoshis. Very few people will be paid a whole Bitcoin for anything ever by the time Bitcoin is ever a standard currency. So it's a little bit silly to even be speaking in a way. And I say that as somebody who loves Bitcoin and thinks it is awesome. But to be speaking of Bitcoin as things people will ever really be trading day to day in a mass market, they won't be. They'll be trading Satoshis, right? Many people will realize that that is part of a Bitcoin. That is what makes up Bitcoin. But a lot of people may never even realize that, or they may not quite understand the connection. And that's fine. As long as it works for them, as long as funds are sent and received properly, and there is no funny business, and the system keeps working, who cares if people understand the underlying system? As long as there's enough people at the core who are developers who understand that, the average consumer does not need to be bothered with that. And that's something also important for the marketing angle. Like, we keep talking about Bitcoin. It's the wrong thing. We're not going to be using Bitcoin. Right? Again, even if the currency, yes, it is Bitcoin, I get it. It's just not what people, nobody's going to say, give me 0.00005 Bitcoin. They're going to say, give me 50,000 Satoshis, give me 10,000 Satoshis, give me 1,000 Satoshis, give me 500 Satoshis, give me 2 Satoshis, whatever. That's what they're going to be asking for. That's what they're going to be demanding. That's what they're going to be sending. So get used to it. In any case, maybe, this whole notion of this $10 million, it's just kind of like, $10 million Bitcoin is kind of ridiculous. I'm sorry. I love Bitcoin. I love it. Could it happen? Yes, it could technically happen. Could it be 100 million? Yes, it could technically happen. Do I think it's likely to happen? No. Why? Well, for a lot of reasons. One of them is, if it's true that China and North Korea control so much of it, do you really want your money of the future to be largely controlled by dictatorships? Now, granted, they won't control your money because it's Bitcoin. You control yours, they control theirs. But if they have or hold a significant chunk of the wealth of the future, do you think that's something that's going to float with free nations who abhor the brutal policies of oppressive regimes? Like China, like North Korea, like anywhere else that's trying to collect as much Bitcoin as they can, that's run by a dictator? No, right? So, yeah, I don't see that happening. I see Bitcoin being a good store of value, and it'll probably reach $100,000 at some point in the next cycle, maybe $200,000, maybe, because they've 10x'd every massive bull run, basically. But going past 200,000 to maybe a couple million a coin or more, it's really hard to see how we will all be using a currency that has such a rapidly depleting number of available coins and Satoshis. It's just very hard to see that will be the one. But do I think it has a long-term future that's pretty good? Yes. Do I think it's a solid investment? Yes. Do I think anyone listening to this or any of the videos I ever make about crypto or blockchain should take my advice when it comes to referring or anything like that? Investment up? No, I don't. You should not. Absolutely not. You should not take my advice. I'm doing this for fun and entertainment. Do your own research. Be responsible for your own investments. Don't invest in anything you don't understand and aren't willing to lose completely, because there's a very high likelihood you'll lose everything if you don't know what you're doing in any case. And even if you do know what you're doing, there's a good chance you're going to lose everything you're doing in investing. And especially in a speculative market like cryptocurrency. So there you go. I said that. But again, this is why I find it very hard to believe that Bitcoin would ever be worth anything close to $10 million realistically, or $100 million realistically per coin, unless it gets there just as a store of value. In which case, yes, it could. But there's just not enough of it to go around as an actual practical currency day to day for everyone all over the planet. There's just not, right? I mean, it seems like there might be. Oh, there's 7 billion people, 8 billion people on Earth, right, by the time it gets a standard. Yeah, 8 billion people, 21 million coins, but there's 100 million of them. So 21 times 100 million coins, that's plenty of money for everybody. No, it's not. I'm sorry. It's just not, especially not when more of it just keeps getting lost. And, until they decide what to do about that. That's a whole separate issue. Anyway, I wanted to mention that particular story and, basically bring it to the attention that there are people who like to do these calculations, and I guess it makes them feel good or whatever, makes them feel pumped about the market, and, it's kind of bullish and good, yay, wonderful. I hope there will be a nice long-term bull run, but honestly, at this point, I would not mind if everything went down significantly and shook out all the remaining weekends and got this next long-term cycle underway. For all we know, we might have already done that, right? It might have. We might already, because if you look at the last month or so, it's, we're still down, but and there's lower highs and lower lows. So in a way, we're still channeling down. But if you look at it, the graph in different ways, some people are like, no, look, we're channeling up, and they can show it with their lines and who knows what. So regardless of where we are, I mean, sure, I don't want anyone to lose more money, but regardless of where we are, I think the long-term strategic value of cryptocurrencies is bright and worthwhile. And I think that Bitcoin is bright and worthwhile in its future, but I don't think it's going to be a coin that's going to be used for 1,000 years or something crazy. I don't think it's going to be a coin that's going to, because it just won't. It will eventually be improved or replaced, right? There is no, you can't have, no system is perfect. You can't have a system like Bitcoin just sit there unchanged, essentially, in terms of its structural capacities. And you can't do that without improving it or replacing it. So that's what I'm going to say about that. Next quick article. I know it's a long video today, but you know what? Sometimes I got to do them. I promise tomorrow's or the next one will be shorter. Next article here, also from the Toshi Times. Go Toshi Times, which by the way is an Ivan on Tech enterprise, right? I believe that's his media outlet. So there we go. BitTorrent reveals upcoming BTT airdrops. All Tron holders eligible. So Justin Sun, the marketing demigod or something for his crypto projects, always seems to know how to get an amazing amount of exposure and coverage for whatever he's doing. Whether he gets things produced or not, that's up to you for the purpose of this video. But he has managed to get himself in the news again by having Tron announce that the BitTorrent token is going to be ICO'd in 2019, and that they will have token airdrops available to anybody who has Tron. All right, so if you hold Tron, you can get BTT airdrops. All right, so the announcement came in a post on Medium, and the initial snapshot will be taken once the block height reaches 6.6 million. Current block height stands just shy of 6 million, and you can see the link if you go to the tronscan.org website. And also, it says here that the first airdrop to be initiated by the BitTorrent Foundation will consist of 10,890,000,000 BitTorrent tokens, which is about 1.1% of the total circulating supply. All right, so that means they have over 1 trillion Tron, right? That there's over 1 trillion Tron, and they're going to circulate 10 billion, almost 11 billion of them. So, as you can see here, basically, they're going to be issuing another 11, almost 12 billion BTT to TRX holders over the next 12 months, which is again going to be worth about 1.2% of the total supply. So, effectively, the foundation, the BitTorrent Foundation, is going to slowly raise the airdrop amounts by 0.1% per year. And they hope to do that until 2025, which would lead them to a 1.7% amount, essentially, of the total supply per airdrop, right? So per year. So this is, I guess, if you're looking for airdrop tokens from BTT and you happen to have Tron, this is an opportunity for you. If you don't know or care about Tron, then I guess it's not really interesting to you. But from the marketing point of view, I view this as interesting because, again, you have a cryptocurrency invented by, Tron, essentially, in its plan to grow itself as a cryptocurrency. Part of its plan was to create another cryptocurrency, which it will compete with, right? People will not put the same dollar into both Tron and BitTorrent. They will have to choose. So they are creating their own competition, as well as they have to compete with the rest of the field. And the BitTorrent token, which is built on Tron, but is separate, will have its own ICO and its own airdrops and its own everything. But why? Why is this interesting for marketing? Well, because I think in many ways it gives more strength to the ecosystem to have more diversification. But it does significant harm to the ecosystem when that diversification is really just splintering of what is still a nascent industry and still has to formulate something. It's still so loose and liquid that to say, oh, this Tron thing needs a BTT thing and they both need to exist. Like, why does there need to be a BTT token? I don't understand that. It's not that I don't understand it, but it just makes, you can have blockchains and tokens for everything, and that's fine. Not for everything, but for a lot of things, and that's fine. But they don't all need to be cryptocurrencies that you really are trying to make into standard monies for the world. Like, that, it's silly, to try. It's just silly. In some respects, like, not every cryptocurrency is obviously going to become a world standard. Many of them will be very small in project size and scope and in reach, and they will have very niche purposes, and they will thrive wonderfully serving those niche purposes. But that doesn't mean that they have to be, or even try to be, or waste all their money in the meantime trying to be a global currency standard. And that's why I just think it's just patently ridiculous to essentially foist another useless crypto onto the market. But hey, if you want some free crypto and you've got Tron, go grab yourself some free BTT, on their airdrops. And good luck to you on that. And if you've got Tron, let us know in the comments below. I believe we still have some Tron, not very much. A token or two, symbolically. But we don't really, I'm not so into the Tron thing. Not because of the technology or anything like that. I just not so fond of the way they market, to be honest. And yes, I know it gets a lot of great coverage, whatever you want to call it. I don't think it's so great to always be in the news and not actually deliver anything. So, that's what I have to say about that. But I wish them luck because I really like the idea of it all. And I think they have a very promising future, but that's the problem. It's always very promising and not actually delivering. And they are one of the biggest examples of that in this particular space. So, but I wish them luck, and I really hope they succeed because it could be a very exciting way to do things. Anyway, there is another article here. And it was published a little while ago, like yesterday, on AMB Crypto. I saw it also on CoinDesk or Coin Central somewhere. The article here on AMB Crypto basically says that an official from the Bank of England says that cryptocurrencies and Bitcoin in particular fail basic financial tests. So the quote is that they fail the basic test of financial services. They're not a great unit of exchange. They don't hold value, and they're slower. One of the biggest challenges for the Bank of England will be how to regulate new entrants to the banking system, particularly from technology firms, right? And the official goes on to say, his name is Stinus, by the way, in case if you're wondering who it is. It's not Nouriel Roubini, who always calls upon his great internal voice to talk badly about Bitcoin, but Hugh Van Steenis, I hope I pronounced that, or Huv, I don't know how you pronounce it, H-U-W. Who? I don't know. Hugh Van Steenis is a senior advisor at the Bank of England, And you can see here, Mr. Steenis also says, what I love when meeting with fintechs is their obsession with customers. The challenge is that will they get the customers before the traditional banks can innovate? And that's just kind of a silly thing, because you're going to have both, right? You're going to have banks that innovate. You're going to have banks that don't. You're going to have fintechs that are ahead of the curve and exist without the help of banks, and you're going to have those that partner with banks, and you're going to have those that sell out to banks. You're going to have those that fiercely compete with banks. You're going to have those that banks basically ignore. There's going to be a whole wide variety of choices, because that's what an ecosystem is, right? It's not just one thing. It's many different things, a healthy ecosystem. And you're not going to have a situation where all of the cryptos, especially those who are mainly led by people who can't stand the banks, those coins are less likely to sell out to banks in many respects, right? Because they were formed as a reaction to banks. And again, for Bitcoin's case, there's no one to sell out. Part of the beauty of Bitcoin, no one can sell out to the banks. The banks, if they want it, they got to come in and buy it. And that just makes everyone else happier who already owns it. So, in that respect, I would say this is a ridiculous argument by the Bank of England that basically, Bitcoin fails the test. The argument that it's not a great unit of exchange is preposterous. The argument that they don't hold value is preposterous. And the argument that they're slower is also preposterous. Many cryptocurrencies are incredibly fast at this point. And Bitcoin in particular is slow at the underlying level, but so is Visa and MasterCard. They're instantly fast, though, on the second layer level. And Lightning Network for Bitcoin also makes Bitcoin much faster. So this is really just a FUD article. Not a surprise to see it on A and B Crypto. They publish a lot of stuff like this. That's just what they cover for whatever reason. So, yeah, it was also on Cointelegraph. Yeah, that's where I saw the story. Okay, folks. Anyway, I just wanted to show you some of these stories because it is something. It is quite something when you see all of this FUD in an environment where you then also have articles like this on the same day in the same newspaper or website. Digital securities platform joins IBM blockchain accelerator program. Yeah, digital securities platform joins IBM blockchain accelerator program. Right? Oh, you didn't even know that IBM had a blockchain accelerator program? Well, they do. And so, basically, there's a company called Securitize that has joined their accelerator program. And why am I mentioning this to you? Well, because the CEO of that company that has joined the IBM Blockchain Accelerator Program says that their goal is to modernize the $82 trillion corporate debt market, currently riddled with inefficiencies and high fees, with blockchain technology. So, for those of you who think that the Bank of England knows that cryptocurrencies aren't currency, please explain to me why IBM has a blockchain accelerator program. By the way, they're involved in more than one. But please tell me why a company like that, which loves making money, is investing in accelerating blockchain technologies. Do you think that they think of it as a non-form of money? Even if it's just going to help them improve their logistics and efficiencies for an $82 trillion market, no matter how you slice it, you think that they're not thinking of that as money? So, all right, folks. On that note, I got to get going. Love every one of you. Thank you very much for listening. Please engage, subscribe, leave a comment, leave a whatever. And of course, share this with your friends, whoever you might know that's into marketing and into crypto and into blockchain. Let them know. And until next time, take care.